Hello, everybody. Thank you so much for joining us for our 8th webinar on a special Tuesday. My name is Alemayehu. I'm a 2004 Ram Brown Scholar and a Board of Trustee. I'm joined in, as usual, every week with my partner and a fellow Board of Trustee, Meredith Eggers. Meredith.
Hi, everybody. Thanks for being here. Thanks for being part of the conversation. And I will remind everyone that this is a place where you should feel comfortable asking any question, and that there may be times when the conversation gets uncomfortable, and that's important and it's okay. So please be comfortable being a little uncomfortable. We've got to be at this point.
That's awesome.
Wonderful. So I'm going to start with a quick introduction of Ram Brown, and I'm going to introduce our amazing panelists today. The Ram Brown Scholar Program is dedicated to nurturing the next generation of African-American leaders. The Ram Brown Scholarship honors the legacy of the late Secretary Ronald H. Brown through a selective scholarship program that advances higher education for community-minded and intellectually gifted African Americans. The program supports students before entering college through the Guided Pathway Support Program, or GPS, during the college years through the scholarship and mentoring, and after graduation through mentoring and networking. Each week, members of the Ram Brown Scholars community will share this panel to discuss relevant topics. Today, we're addressing an issue that is dear to my heart: entrepreneurship and unlocking access to capital. We have two of our esteemed alumni and a special guest today. Frederick Groce is a Ram Brown Scholar, class of 2010. He's a principal at Storm Ventures and a graduate of Stanford University, my fellow alma mater. Peter Boyce II is a Ram Brown Scholar, class of 2008. He's a partner at General Catalyst and a graduate of Harvard University. We will not hold that against him today. John Thompson is the chairman of Microsoft, venture partner at Lightspeed, and our special guest today. Thank you so much for all of you for joining us. I'm gonna start with you, John. Thank you for coming on and spending your time with us today. We're at a very special time now with COVID-19, literally transforming the way we do business, the way we interact with one another, the way it is termed as a great reset. And the current recent awareness and sense of urgency when it comes to racial inequities in the United States and around the world. And one area that has been affected by racial inequality is the tech industry, as well as the world of venture, from the entrepreneur side, as well as from the investing side. Where do you see that this great reset, which is an opportunity to set stuff in the right direction, where do you see our focus should be, and what are some of the key challenges that are going to be highlighted in the era of COVID?
Well, I think the COVID situation certainly has been a catalyst for lots of things in our economy, in our country, and the global economy, quite frankly. But I think what we experienced here with the George Floyd situation and all of the other things that have happened in the country before and after George Floyd has awakened us to the reality of where we are, which is, while we made great progress in the 60s and 70s and 80s, it just kind of slowed down to the point where we weren't really paying attention. And companies in industries like tech, big companies like Microsoft, while they've done very, very well, they haven't done as well in building a diverse workforce as they need to. And candidly, while many companies have stood up and said, I've got to do more, the question is, how do they do more? And I think it starts with fundamentals. We've got to go back to, how do we get more people of color interested in STEM-related jobs and STEM-related careers? We have to go back to historically Black colleges, where many people go to school these days, and encourage them to focus on STEM, and equally as important, encourage them to focus on entrepreneurship and creating entrepreneurial programs so kids can learn at a very, very early age what it's like to be an entrepreneur. I never even thought about that. My idea when I was going to college was, I want to be a businessman, because that was going to be different than what had happened in the African American community back in the 50s and 60s. And now many young African Americans want to be entrepreneurs. So we need to treat them or teach them how to do that and do it well.
Sorry, I was muted. That is absolutely spot on and wonderful. So and I'm going to pull in everybody in. So Peter, for you have been tackling entrepreneurship and also venture investing with Raft Ventures while on campus. What are some of the ways where you have been able to include students, not necessarily in an organized classroom fashion, but also as part of the kind of the extracurricular activity of college, being able to invest, getting involved in entrepreneurship? How does that be used in a way to be more inclusive of our industry, to be more inclusive of racial minorities, to get involved once they have graduated college?
Yeah, absolutely. Yeah, this is a big part of my experience when I was on campus and a student a few years ago. I think I think college is an exciting opportunity because that is when folks start really engaging in this conversation around what kind of career paths are available to them. And for a lot of folks, you're showing up to college and maybe you haven't seen role models and you haven't seen examples in venture capital, entrepreneurship, and technology. And so I think it's kind of a critical, kind of moment for that exposure. And so, my work with Rough Draft has really been around independent of, background, independent of, if your parents were part of the prior kind of software revolution, how do you kind of create a greater forum for access across? And really, I think the earlier you can expose folks, the better, right? Because that's when you have the trajectories, that get influenced for 5, 10, 15 years down the road. So our work with Rough Draft has been, how do we work across, different universities and give everyone a chance to get firsthand exposure to what the world of venture capital looks like? What does it mean to help friends that are starting and building companies? Oftentimes these are companies, they look like side projects, they look like class projects, they look like, kind of just a way to spend, free time with friends. But that is the way value creation has been taking place for the last few years. And if we think about, the way that, so much of our society is going to be shaped and the way that value is going to be created for the next 10, 20 and 50 years, it's really important for folks to understand the role that entrepreneurship and technology, just as John was describing, and the role that venture capital kind of plays in accelerating and amplifying this, that this is a place where, these young people should be, spending time and exploring. And I think the campus environment is a great kind of opportunity. And I think one where you can be very, very, inclusive, which is something I've been really, really excited to be a part of.
No, that is wonderful. Fred, so for you, one of the additional things that you had started recently is Black VC and making sure as a nonprofit organization to engage the Black community directly into the world of VC as well as tech in general. And was any of kind of your desire, being at Stanford is an added advantage of getting that entrepreneurial and VC bug, but also having that specific focus of the African-American community is really important. Where's your take around kind of building this, addressing the racial inequality within that community, within our community?
Yeah, no, I mean, it's a good point there. And I think what John and Peter both said around sort of the focus of the undergrad is a really big part of this, right? But I think, the way I've always thought about it is we need a multilateral approach. We need to be thinking about this in the structure of the system itself. And that means we have to be focusing at the beginning, which is, the opportunities on the campus sides, but then also evaluating and thinking through, the industries of venture capital and how people move in, right? And the reality is, at least in venture, the average analyst and associate kind of folks coming in usually have a few years of work experience. They're often coming from either startups or banking or consulting, or even sometimes from some of these large companies. But those pathways, when it comes to diverse individuals, particularly the Black community, haven't always been as accessible, right? And that's largely because, a lot of the ways hiring happens in venture capital is just still predicated on networks. And that's why, at least within the Black community, so many of us went to Stanford and Harvard, as we have here with Peter and myself. And that's great. I mean, that's worked, you know, to date, but we can't say that that's got to be the system or the mode that we're going to use to operate moving forward. And we've got to sort of do better as a community. And so what we've tried to do is say, hey, look, you know, there's going to continue to be a lot of effort, and we as a community support those efforts on diversifying, building out STEM education pathways. We need to partner and enable that. And then we need to support some of the work that the big companies are doing. But we need to be making sure that as VCs, as a community of investors, that we're also not forgetting that it's our job to network with the Black diaspora that exists in these companies and ensure that we're creating those pathways and those networks for those individuals after they've been at, say, a Microsoft for 2 to 3 years, that they have the ability to be able to stand up that company and they've got the network to be able to be successful there. And so that's where we've been really focused on trying to build these connectivities within the community itself. And then making sure that, hey, look, if you're just trying to break into venture itself, that there's a pathway to do that, right? Whether that's through our Breaking into Venture programming that we run, where we're doing you know, individuals through a 7-week course to give them the basics and fundamentals of venture capital so they can be successful in their process to break in, or even just building the community within the venture community that's Black as well, right? And this has been a community that has been growing. And while it's still small, you know, only 2% of check writers in the community are Black, it is still growing, and we need to make sure that we do the best job that we can, that we have a community that helps each other, right? And I learned a lot of those principles from Ron Brown. I mean, that's one of the beautiful things that RBS has built for us all, right? This supercharged highway of folks and individuals that help all of us and help each other navigate the challenges of college, navigate the challenges of getting that first job, career. And that's what, you know, Mr. Mallory and Vanessa have done so well over the years, is building.
No, absolutely. I think kind of a lot of the connections that are made through Ron Brown, kind of this consistent mentorship is really important because, you know, for me personally, when I first went to Stanford, it feels like ages ago in 2004, that was an amazing accomplishment for me. Like, and everybody in my family made me feel that way too. It's like, boom, you're done. If you could get just a job and keep that job, that is it. And it was actually seeing you, John, being the CEO of Symantec. And there wasn't anybody that looked like me that was in any of the tech sector. That I kind of say maybe kind of ruined my expectation, because for me it was, oh, I haven't made it. Actually, I have no excuse not to try to make it. So just being able to see somebody in a position of success and doing a phenomenal job at that inspires just by osmosis from far away in a phenomenal way. At Stanford, that happens at a higher level. We had classes as soon as that inspiration was there to pursue ventures, to do any kind of stuff. If you want to pitch an idea, just everybody in every corner was there to listen to you. That is not the case in a whole lot of places where a majority of minority students, as you say, John, are there. What are some of the ways of, one, institutionalizing and making sure that we could get role models like you have been by just being a consistent success in what you do, but also kind of this young generation of leaders that we're seeing, and Peter and Fred, what I have been in my own little thing, trying to kind of show what are the ways to institutionalize that and making sure that it reaches. So to us, reaching out for me is reaching to my Black Engineering Society at Stanford or Harvard. And that is already a privileged group. So what are some of the ways of institutionalizing that, John?
Well, I think it's going to be quite challenging to institutionalize it in the near term. I think what we're going to have to do is figure out what is the structural evolution that we'd like to see occur that has more people of color, more people with diverse backgrounds interested in, candidly, more high-risk roles. Because it's a higher risk role to be an entrepreneur than to be an employee working for a big company. It's a higher risk role to be a successful venture capitalist versus just investing. And so I think we've got to kind of change the norm to where people think about this as it's a higher risk role, but I am more willing to take advantage of that risk because the rewards on the other side could be far, far, far more pronounced, if you will. Now, that being said, I think we also have to make sure that we encourage people that risk-taking isn't all bad. I can remember when I decided I'm going to leave IBM. After 27 years, 9 months, and 13 days, I decided I was going to leave because I wanted to be a CEO. And I made it very, very clear to the Heidrick and Struggles team, don't bring me a number 2 or number 3 or number 4 job. Because, oh, by the way, I've got one of those here that's much larger than anything else in the Valley right now. So if you can bring me the top job, I'd be interested. And I think it's important for all of us who have reached a point in our careers that we become very, very clear about what it is we're trying to accomplish and what move we want to make next.
Oh, fantastic. No, I think that is beautiful. Meredith, do you want to add?
Well, I think that sort of the other piece that we have to talk about here, the elephant in the room, if you will, is it's not Frederick's job and Peter's job and John's job and Sam's job to fix this entirely. At this point, venture has largely been a bastion of relationships, a bastion of white male relationships. And I'd love for us to talk a little bit about how those that are in those roles and are those people can force the change and what the advantage is to forcing that change, not just for young Black people and young Latinx people, but for those firms and the economy.
Peter, Fred.
Peter?
Yeah.
Yeah, no, this is 100% the key question. So I think it's a few things. I think, number one, I look at the roles that are kind of, that either exist at these firms or should exist at these firms. And I think about just ensuring that, again, we think about setting folks up for success over the long term and setting firms up for success over the long term. I mean, I think it starts there. So, I think it's super easy, to make the summer intern hire that someone's niece, nephew, you know what I mean? But so it's like, I think it starts at that level of assessment. So I think that's one. I think number two is making enduring commitments, because I think that's to the question here about kind of, creating institutional and kind of structural changes. Because I do think, one of the things I'm quite anxious and nervous about is that this moment, you know what I mean, kind of like passes us by and we haven't made permanent enduring changes. So really kind of setting the bar there. And so, one of the things that I think is really important to think through is, I almost think about it as like, imagine, for each firm, you know what I mean, whether it's the companies that we're investing in or ourselves as a firm or our peers, imagine we're preparing for a board meeting, on each quarter, and we have a scorecard, right? And we have like a 5 checklist scorecard. We have an open, honest, transparent conversation about where we are today and where we want to go. And recognizing that the 4 or 5 things you can put on this scorecard, some of them are going to take 10 years, right? So when we talk about having any meaningful, number of partner and managing director level, leaders at multi-billion-dollar, venture capital firms, that's a 10-year project, that each of us is now, playing our small part and contributing to in this conversation. So I think it's almost just that kind of mindset, like, setting out, these are the 4 or 5 kind of key measures that we're going to use, and we're going to assess ourselves on a quarterly basis. It's not going to go away. It's not a week's worth of work. It's not a month's, worth of work. I think that's really critically important. And then I would double click into this point around mentorship and role models, because I think it's so essential and it's so crucial, and it's part of what can be different today than 5 years ago or 10 years ago, which is each of us, but everyone has the potential to be a mentor for 1 or 2 or 3 people. I know I was the beneficiary of a number, of hours, tens of hours, hundreds of hours of mentorship from the Ron Brown community when I was trying to, figure out from trying to be a physicist to being an entrepreneur to being a venture capitalist. And like those conversations made all the world of difference. So I think it's coming up with structural ways to really use our most valuable resource, which is time, right? And think about how can we make time investments in the community of individuals that can be at the helm, of these firms, of founding their own companies, founding their own venture firms, leading their own venture firms, and making real demonstrated time investments. Because I think that's where outcomes can dramatically change. And I think it's also just a recognition that the industries that define success and where role models emerged over the last 20, 25 years is different today and going forward. And that's where I think, this kind of evolution to, really, I think, shining a light, as we talked about here around technology, entrepreneurship, and venture capital is just going to be so key, because that is where so much of the uncapped wealth creation and value creation that flows back into communities, flows back into really showing what success looks like. That's how we get the flywheel going. And so I think that's going to be really important. I know sign me up for any and every, conversation that I can have. Frederick's, network that he's built out with Black VC is, I think, a perfect example, of a structured community. And so anyway, that would be my way of thinking about this, which is just really the expectation of consistent and enduring time investment in mentorship, which I think is just crucial for defining a very different next 10, 20, 50 plus years.
Yeah. I'm going to build off. Oh, sorry, John, please continue.
No, go ahead, Fred.
I was going to say, building off of what Peter's saying, I think he's right. We have to realize that, this is going to take a structured approach that will take some time, right? We don't need to fix everything overnight. That being said, we do have to take action now, right? And we have to be willing to do that. And the reality is, like, venture funds are built so that, they're constantly bringing talent in, particularly at the junior side of their benches. And so, I think one of the big things that almost every fund can do is just focus on making sure we're bringing in diversity when we're hiring, our analysts and associate classes, because it does begin with building the opportunity. And that's just about doing the work, right? I mean, these communities are out there. There is pipeline out there. It's not that there is a pipeline problem on the venture side fundamentally here. It's a problem of being able to and willing to do the effort to go reach out into those communities in the same way that we all spend a lot of effort hunting for communities of founders around certain verticals or sectors that are hot in the market. And that's what we have to do. And I think now is the time for us to begin this process and continue this process. And again, this is a continuation of a process and a movement that's been going on for decades. And in many ways, folks like John really started this work by breaking some of those glass ceilings. Individuals like Ken Coleman in the venture and tech ecosystem started a lot of this work many years ago. And it's on behalf of all of us to sort of continue that work. And when I think about it, right, like if we can ultimately start to break people into the junior bench, then we can do what Peter said, mentor those individuals, ensure that they're accelerating through their careers. And Black VC was built to be a community for peer mentorship in some ways, and structured sort of efficient one-to-many mentorship for those few Black general partners that had been successful, so that they could teach sort of the broader community the things that they needed to know to be able to navigate and chart a career in this ecosystem. But we need to be supporting those kinds of efforts holistically and really leaning in. And it matters because, over the next 30 years, this country's changing, right? We become a minority country. And if we want to win as venture capitalists, invest in the best companies, well, we've got to acknowledge that our buyers, if you're an enterprise investor, the buyer profile of the people making those buy decisions are going to look different, and they're going to think differently, and they're going to hold expectations higher to the vendors that they're going to choose to allocate their dollars to. And on the consumer side, the consumers of this country are evolving and changing, and that comes with buying power. And that's why we as VCs ultimately should be leaning into this diversity and diversification of our benches, because we want to be winning. I mean, no one joins a venture fund not to win and want to be successful. And I think we can all do that. And diversity is a part of winning ultimately.
Well, I don't think there's anything more important in career development than mentorship. And candidly, if I were to go back in time 49 years to when I started my career, there was no one else in the office that looked like me. I was the first and only African-American sales rep for IBM in Tampa, Florida. And so as we think about mentorship in the world in which we live, it's not about having someone who's a person of color be your mentor. It's about having someone who respects you, who thinks you have enormous career potential, and who wants to invest the time in you for you to become a successful leader or whatever the role is that you're going to have. And so I think it's really, really important that we think about mentorship in the context of the relationship that we're going to have with that individual who's going to be a very, very important advisor to us as we develop our career and career success, if you will.
I think that's so true. And I think thinking back on my own career and watching our children and watching Ron Brown scholars that I've mentored, sometimes it seems as though the person that you might aspire to have mentor you would somehow subconsciously know that and walk into your cubicle and offer to be your mentor. That's not always going to happen. And it's not going to happen the other way either. So if there's someone out there that you think could be helpful to you, let them know that. And if you see someone in your office who you feel like you might be able to offer even the smallest bit of guidance, take the step to do it. It's a little scary at first, but it's incredibly rewarding for both sides of the team.
No, absolutely. And I think, once you start showing example that this moves the needle on the bottom line, the benefit of that, then it will start to change in a big way. So in that spirit, and to what you've said, Fred and John and Peter, what is the role of LPs, which usually actually are, sometimes include pension funds that are more inclusive of entire societies, teachers associations and stuff. What can their role be in dictating that change within the VC world? And what could the role of consumers be? It may not be directly, but what are ways where kind of that diversity on the VC level could come from outside push as well as inside push?
Well, I don't think venture capital world changes unless the partners in the firm decide they want to implement something that's different. And if you look at what many of the firms in the Valley have said so far, is they recognize that we may have fallen a little short of where we should have had our emphasis, and they've all spoken up and stepped up. The question, I think, will be 2 years from now, 3 years from now, where are we? Have we made real progress? And have the LPs and the VC firms stepped up, because they too can take a little bit more risk in identifying opportunities that are led and managed by people of color. That might not necessarily hit the sweet spot of everything they want to do, but if we're going to diversify this workforce, diversify this tech sector, LPs are going to have to take a little more risk than perhaps they have in the past.
Yeah, I think one other thing that
partners on the line, you can comment.
I love it. I think one of the other things that LPs can do, and I think actually VCs can do this as well, right? Which is the power of the question, asking about is there a strategy, or is there any concerns around ensuring there's a more diverse team on the investing team when they're determining to write that check or rewriting that check? And I think of it less around like a requirement of anything, but asking the question itself gets people thinking. And one of the things we at Storm do is we notice that the founding team that we're excited about investing in isn't diverse, and is homogenous, whether that's on gender or race or ethnicity. We'll ask the question, hey, are you aware of this fact? And we think that could be a problem long-term. And just have a little bit of a conversation. And we're not requiring anything. I mean, obviously as minority investors, right, we can't really require anything, but we can ask questions and prod people and help them along that journey to understand why this could be important. And I think LPs can play a role like that and be partners with a lot of the funds that they've had long-term relationships that extend multiple funds. And that's really, I think, the power. It's the power of suggestion ultimately.
And you can ultimately decide whether or not to invest in that team if you feel like it might be dysfunctional down the road because it's not in a position to manage that kind of diversity.
Yeah, that's right. And I think maybe two other, because we can also expand to the other kind of stakeholders. I mean, founders can also put even more kind of pressure and reinforcement. You know what I mean, to be interested in the venture teams that are thinking about this. But on the LP piece, I think because LPs sit across so many different venture firms. I mean, they're a great source of benchmarking and kind of insights across the industry. And I think one thing that will be exciting is just hearing them amplify some of the emerging success narratives for the partnerships, that are, already showing, kind of, progressive signs, you know what I mean? Like, oh my gosh, like, that partnership was here, they're now here, you know what I mean? And like, we looked at their returns last year and like, oh my, so there's going to be that kind of, getting back to Frederick's point too, around just kind of winning and the bottom line reflecting this. So I think LPs are going to be an important part of that narrative. And then the second piece, it 100% comes back to the risk profile, and also just recognizing who was able to take on, massive amounts of risk and who wasn't. If you think about the role that, existing financial buffers, within households and communities make for being able to take the higher risk job or not. And so, I think in a way, LPs, I think, are going to be an important part of kind of taking a chance on and helping, really, this is an important time for putting new managers into business and taking a chance, so to speak, on these kind of fun ones, in the anticipation that, again, it's going to take 5, 10, 15 years to really see the fruits of this effort. But it can make a dramatic difference. And I think LPs have that power and have that influence, which I think it's going to be an important part of just, again, I think about the incentive structures and the reinforcement loops. And I think that combined also with founders, I think founders have an opportunity to say, hey, like, we hopped on video with your entire team and we didn't see one person of X, Y, and Z flavor. You know what I mean? Like, and that, I think that gets to Meredith's question too, which is, where are some of the uncomfortable questions lingering? That's totally a place where there's an uncomfortable lingering question. You can have 5 groups of men that look one way, you know what I mean? Like 6, 7. So I think that'll be one of the interesting, conversations to see even founders force a little bit more, which is, hey, we're entering into a relationship with you for the next 10 years. And this is something that's really important for us as we think about our board, our customer community, the way that we think about alignment, you know what I mean, of our interest. And so I think that'll be another really important place too, to just ensure that there's the question is getting asked, and also just folks are, finding places for alignment, and, it keeps it top of mind in a much more enduring way.
So adding to that point, Peter, sorry, John, go ahead, John.
Are LPs focused simply on returns, or are they focused on this issue of diversity and inclusion? Because it's not clear to me that you visibly see that from these firms. Now, the firms that have stepped up and said, we're going to do more, clearly that's there. But ultimately, the LP is the one that has to say to the firm, I want to see you do more, because it's his or her money that is being put to work, not necessarily the firm's money. And so the LPs have got to have a voice here on this issue of diversity and inclusion. Otherwise, it's not going to make the kind of progress over the 10 to 15 year period that we'd like to see.
Absolutely.
I agree.
One of the points is we're starting to see a lot of minorities taking a GP role in fund ones instead of well-established firms. And we all know that the well-established firms just naturally attract some of the best talent from a venture side. So they have a much easier way of winning. Like, a brand new venture firm versus Lightspeed or Sequoia or Kleiner, for an investment round that has been contested, they usually win. So it makes it very hard for new venture managers to show their success or their weight, and they still get to manage. But one of the focus is because if you look at a lot of the data, the GP's number in some of the top VCs is not increasing. It's like we were just joking earlier, the number of VCs that we have in here is a significant percentage of the Black VCs out there. How can we change those? One, seeing new funds that are being managed by minorities is wonderful, but I think the LP side is important. But what are ways of calling into action change of kind of GPs coming up? Because the pipeline problem is not necessarily the answer. And Meredith has raised that point a number of times as well. How can we make sure that those GP positions, we start to see kind of the pathway of those GPs coming in inside some of the well-established firms that naturally have a much easier advantage of attracting investable talent? Anybody? John?
Go, Frederick.
All right,
Peter. Yeah, I was going to say, it's a hard question, right? And the reality is this was what feeds into when we say, you've got to think about this over, 10 plus years fundamentally, and creating sort of the right ecosystem, right? Because the reality is if you're looking at a GP spot at a top firm, those are individuals that have, decades of experience and clear success already, right? Oftentimes. And the reality is, many of the Black investors out there, even those who've been more senior and been successful and been able to raise their own funds, they haven't been in venture. We haven't, as a community, had so much access yet that we do have a large pipeline of potential GPs, at least at those big firms. Now we're talking about partners, then the story starts to change a little bit, right? And I think as you extend to the more and more sort of junior bench and you start to go down, the expectations have to become higher and higher on what we can do, and shorter in terms of the time in which it's going to take for us to materially start to show that change. And I think that's how we've got to think about it. I think that, look, if we are looking to bring in more senior partners, I mean, we can look to funds that were raised by, Black GPs out there, right? And bring those individuals in. I mean, we see that happen all the time. Note funds, sort of grow. They sometimes evolve, become, generational in the sense that they've raised multiple funds sort of after each other, but sometimes partnerships decide to break up. They don't continue, and there creates sometimes opportunities for us to go find talent. And oftentimes when firms are hiring partners, they'll look to other firms to bring a partner in. And so there is a pool that we can hire from if we're looking. It is smaller as you start to go up to some of those more senior role types. And so that's why we've got to think about this and how do we sort of build a community all the way through. But that being said, look, I actually do think it's a great thing when we do have people leaving firms to raise and become GPs themselves, because we do need more check writers at the end of the day in this community. Because, we as check writers, Black check writers out there, we bring access to a more diverse founder community and individuals. And the reality is, if we're not meeting you, we're not investing in you. And so going back to this question on what can LPs potentially be doing and what can we as VCs be doing, I think one of the things we all should be doing in the community is evaluate. We all have CRMs, where we manage every deal that we meet in a year. Well, we should be looking at how many diverse founders did we meet last year, and do that by partner and by investor. How many women did we look at? How many schools did they come? Where are their profiles that we're missing? Because then we can become proactive and say, okay, we have a gap here. And now we have data to suggest that gap, and we can start to go after that audience. And then a year later or 2 years later, we can reflect, are we doing better? And certainly that kind of data center approach is the right one for us, as I think, as a community to move towards. Because if you're not going to start there, then this conversation, tends to stay with sort of ideals. And we ideally all agree that diversity is good. But I want to move that conversation to, what have we actually done from a data standpoint overall?
Yeah, I would click into a few areas here. I think, number one, this gets back to how and why I spent a fair amount of my time focused on starting at the university level, because that's where we're going to have the bench, in 3, 5, 7 years time. So that's one piece. And I've already started to see, where that can lead. So I'm really, really excited for more of that, because that's how you can have more folks that have the 3, 5, 7 years of experience that are going to be required for taking these GP leadership positions. So that's been a big part of what I've been excited to see. I think that the second piece is, I think really coming to, recognize and celebrate the fact that our collaboration dynamic as a community, and even with some of these kind of emerging, managers that do have diverse backgrounds, I think is even more important. So I think about, the fund ones and the fund twos that have gotten raised. I think about collaborating and trading notes with them and supporting them in a totally different way, right? Because I think part of what success for them will look like is they will be part of the platform firms, in the next 3, 5 years that have expanded, that have 7 GPs, that have an analyst program that are, we haven't really seen that built and scaled yet. So I'm really excited about that. So I think that's where, take our friends that are, are running these firms, and I think about, the importance for mentorship and collaboration with them, I think is really, really key. And then the third is, and this gets back to Meredith's question too, is we're going to need more partnerships that take a chance on folks and bet ahead of the curve. You know what I mean? That's where, I'm grateful to my partnership. They took a chance on a college student who, had not a lot to, their name. And so, I think we're just going to need more of that. And then again, enough information, enough data to reinforce this narrative that this is success in the context of returns and what founders are looking for in having a really robust conversation as it comes to, these investment decisions. And then to the point here around just, how do these firms, reflect what, the future that we're all going to inherit, like Frederick mentioned, we're all going to inherit a more diverse, customer community, founder community in 10, 15 years. So how do we ensure that firms are kind of moving in that direction to be, kind of well positioned, I think is so key.
I think those are really, really valuable points. Just one point to add in there was, because venture inherently is all about intuition, and there isn't kind of this magic formula or software you plug in the right person, it comes out telling you this is going to be the killer app or this. Like everybody says, oh, I just looked at this, and then so it is susceptible to bias. So that is why if you look at a lot of LP managers, they tend to put in money on people that look like them. The GPs usually, naturally, like 80% of the time, they almost look alike. They're like, they look related. And then if you look at the GPs and some of the founders that they've invested in, they all usually look alike as well. So this diversity we're talking about is not just, a minority diversity that is needed. It's gender diversity as well. How can we make sure that this bias is hurting us? Because we are trying to create a solution that is supposed to address solutions for the entire community, but how can you do that if the problem solvers are only a very limited number of people? So what are ways of kind of this bias awareness? And do you see it in any of your firms? We're going, like, are they saying, oh no, like we're not, there's some sort of blind spot that we're having? Like the minute you recognize that as a problem, there must be a blind spot of not having a minority person or a gender diversity on my team, then I'm not going to do great. So are you seeing that in any of your firms? Are there conversation within the general community in bias awareness?
I'll make a quick comment on Lightspeed. It's been interesting to watch that firm evolve over the last 2 years since I've joined it. And while I was one of the early persons of color, they've added many more since. And candidly, one of our best young deal makers right now is a young African-American lady who's doing an amazing job, quite frankly, at identifying and closing deals inside Lightspeed. So it just goes to show you that smart people of color can do exactly what other people of different colors do as well.
Right. Yeah, I think to John's point, it's not we keep saying it, but it's not a pipeline problem. But there's plenty of skill out there. There's plenty of talent, and it's not just at the premier schools. It's at historically Black universities. It's at state universities across the middle of the country. But people have to feel like they have the opportunity to knock on the door and have the door be answered. And somebody's got to answer the door and overlook the fact that they may not have the perfect pedigree. And I think that you're right, John. Lightspeed is doing a good job of looking in different places.
Yeah, here's one, I think, question that I think needs to probably get raised a little bit more, which is with respect to biases. I mean, a lot of it has a reflection of one's network and where they're spending time. You know what I mean? And I'll tell you, just, when I channel, some of the, again, I keep coming back to, the tough questions that Meredith has kind of primed us for. I think one of the questions is just, who are folks spending time with, right? Like if we were super honest and like went into everyone's calendar, I mean, part of it is, just a reflection of just, who are people's social networks, you know what I mean? Who is their professional network, you know what I mean? Like this notion of, what are the clubs that exist, you know what I mean? Or need to exist. So I think that's a big piece of where, a lot of these kind of, networks kind of get reinforced, you know what I mean? Inadvertently, because there's never a question that's asked. And so when I think about the biases, I mean, I think a lot of it is reflected by, just how is someone's kind of social network been constructed to date? And is that where the biases are basically emerging from? And so, this is where I think it's super important to ask the question, you know what I mean? And Frederick mentioned this too. I mean, CRMs are great ways to kind of, start measuring and benchmarking, and just really just doing a quick gut check. I can tell you, I would predict this, you know what I mean? If you went to a lot of GP calendars on a weekly basis, you know what I mean? You wouldn't see any person of color of any flavor or seniority or anything in that calendar. So when that's the case, you know what I mean? Like, of course, you know what I mean? There aren't going to be ideas for the next GP candidate, you know what I mean, to emerge, right? If you're not having, social coffee sessions with folks that have, you know, these other folks in their network. So I like thinking of it there. And this is like another, I think, area where I've been really encouraged and excited by folks kind of doing the self-reflection and being like, hey, you know what, actually, I don't know any women of color that work in venture. You know what I mean? Like, can you introduce me? And I'm like, you know, this is Frederick's list over here. You know, this is John's mentees. You know what I mean? These are the RBS women that Meredith has mentored. You know what I mean? So I think that's, one of the other areas, you know what I mean, where it's like, you know, we can kind of get called into support too. But again, that requires some self-awareness and reflection, you know what I mean, from the broader community that we're still in the very early innings of.
I think we also need to coach people about mentoring. Because I can't tell you how many requests I get to mentor someone. And I said, well, gee, I don't even know who you are and what you do. So how can I be helpful to you as a coach or mentor when we don't really have a relationship, when we don't really know one another? And so one of the things that I think we need to do more effectively is coach people on how do you attract a mentor? How do you find the right mentor? Because just because someone says, yes, I'm going to be your mentor, doesn't mean that they're going to be meaningfully influential on what you do day in and day out. The only way they're going to be meaningfully influential is if they truly do engage, if they truly do get involved with you. And that's what mentorship is all about. Not just saying, yes, I'm going to have a meeting.
I think that's true. And I think the other thing that has come up is there's mentoring, and then there's truly sponsoring or being there for somebody to bring them into the room at a time when they would be exposed to an opportunity that they might not otherwise be exposed to, or to make a connection for them. And I think that's also incredibly powerful and has been brought up a couple of times in the chat.
That sponsorship piece, Meredith, is so key, right? And it goes above and beyond, right? Leaning in, it's about, you know, utilizing your own privilege, right? And saying, hey, I'm going to take some of that privilege and give that to you as well, not just advice, right? I'm going to open doors that I know I have access to, and support you moving forward. And I think, you know, that mentorship piece and that support and sponsorship is needed on the venture side for so many people, and it extends. It doesn't need to be from black to black. It needs to be diverse fundamentally. And on the founder side at stage, you know, day one, right? And I think, you know, one of the things, you know, we as an industry, you know, this is one of those uncomfortable sort of conversations that we don't talk a lot about, is that like everything in many ways is built on this friends and family round, right? Which, you know, at least in the United States, you can't look at the friends and family around and then not look at the fact that you have so much wealth inequality that is, you know, along racial lines. And that creates unique challenges. And so many of that first generation and second generation of, you know, Black folks who have made it into tech, you know, we have to reflect on the fact that like the risk they're taking if they leave does look different sometimes than the risk that others might be taking. And what do we as an industry do to manage that or understand that and balance that out, whether that's leaning in differently with those groups? Because, you know, many of folks are first generation, right? They might be supporting their parents. They might not have that ability to say, you know what, I can go from making $200,000 a year to making $60,000 or $70,000 or no salary for a period of time. And we need to acknowledge that fact, right? And make sure that this structure of venture capital is built fundamentally in a way that provides access and about an opportunity for everybody. And we understand the context in which those people come to this community ecosystem. And it's that like Black founders raise significantly less money at every single stage of their career, of every single stage of their company growth. And that means they have less capital to compete effectively against their non-Black sort of led companies. And that's going to have a material effect. And so we need to be thinking about that. We need to be checking that and realizing that those are the things we need to talk about, because you know, Series C investors are going to look to the Series B folks to say, hey, it's your job to create pipeline for me ultimately. And that dynamic will always come down to then the friends and family ring. Yep. And you've seen structural attempts with pre-seed as a category trying to come up, but that's become almost sort of this launching pad for funds. And so they graduate out of pre-seeds very quickly and they don't stay there. And we need to be realizing that, okay, if that's going to be this dynamic that exists here, what are we going to do to solve that problem? That's on behest on everybody in venture to come together to solve that and have that conversation.
That's a really important point.
Certainly is. Agreed.
And Meredith, are we going to start tackling the growing number of questions from the audience? If anybody wants to do a live mic as well, we could take one or two. But in the meantime, we will read some of the questions. Meredith. Oh, you're muted. You're muted.
Thank you, Sam. So we have been pulling some of them in, but one of the questions is there a national VC association or a central place for collaboration of ideas? And we do have a list of those. And what I'd ask the panel to do is any other suggestions, shoot those to me in an email. And then when we send the recording out to everyone who was registered, we'll include that in the body of that list rather than adding it to the chat right now, or too often we read stuff like that, and what happens is it's very hard to capture it while you're listening. So we will add that. Let's see. Let me go here. I find that Black people are often over-mentored and under-sponsored, which I think is the question we're addressing here. I'm sure many of you here and other Black investors would be willing to mentor those looking to transition to VC. But how do we position ourselves to find sponsors that will ultimately be the ones that make the hire? So I think the question here is, we've talked about what the difference is between mentorship and sponsorship. How does one put themselves in the position to be sponsored? And John, you were talking a little bit about people presenting themselves to you. So why don't you start with that?
Pardon me, I've got a phone ringing in the background, so why don't you go to someone else and I'll come.
Peter, why don't you go ahead and start, and then we'll pass it back to John.
Yeah, I think a big piece of this has to do with, what is our realm of influence. And so, the way that I've thought about this is the area where I've been able to sponsor folks has been at the university level and giving folks the check writing ability to make a difference in those friend and family rounds. It's at the starting part, if you think about the strata of venture capital. So I've focused a lot of time there. And I think sponsorship on that piece really has to do with, number one, just one's own realm of influence and control, right? So that's one. I think two is giving folks really the opportunity to step up, and basically just give folks more and more responsibility and more upside, because I think that that's something that's really important. So, giving folks, I think the challenges and feeling like there's uncapped, upside and room for them to run, I think has been the second really critical piece. And then I think the third is you've got to be thoughtful that, you can't do this with 100 people, or 1,000 people. And so being, I think, really thoughtful and intentional about the impact, because sometimes it is one person, it is one conversation, it is one career launched, and that can make all the world of difference. And so I think that's the other piece, which is, rather than spreading like peanut, one of my colleagues uses it, spread like peanut butter as an expression, like being really, really intentional and impactful, I think has been really important for my own experience, and the one that I've tried to share with others.
Great, thank you. John?
Yeah, for myself, I don't distinguish between mentorship and sponsorship. Quite frankly, I think it's important for someone who wants to invest time or money that you have to be willing to invest more time than money, because guess what? That money is far less valuable than your time. And so I would argue that we've got to make sure that while mentorship is important, engagement is more important than mentorship. And it's that process of engagement that helps to develop that young leader so he or she can become something bigger than you might have envisioned or imagined when you first met him or her. But I think it's really, really important that we be engaged with those that we refer to as our mentors, and don't distinguish between mentorship and sponsorship, because quite frankly, when I write a check, I'm writing a check to you because I bet on you, not on your idea. I bet on you. And that's what most VC partners are all about, betting on the individual, not necessarily just the idea.
So are there any suggestions to those that are seeking mentorship or sponsorship to really put themselves in the right position to present themselves in a way that makes you want to engage with that level of commitment?
For me, so I think one thing, and this may be taking it the other side a little bit, right? Like on the mentee, right? The individual that that is looking to be mentored, you know, I think one of the things people do wrong, and this is something, you know, that like I learned even, right? And through my relationship is you have to do a really good job of bringing back the feedback loop. You're going to get this advice. Make sure that advice is listened to, even if you disagree with it, but then come back and explain why you didn't do it, right? Bring that back, because no one wants to, you know, mentor someone that doesn't feel like they're taking that advice or listening. And again, it isn't that the mentor has every, you know, is going to be right every single time, but it needs to be, you know, both ways. And you have to bring that feedback loop. And oftentimes I also tell people, like, it's your job to try to provide value to your mentor as well. And the mentor is never going to expect that. But if you can delight them by providing some value in some meaningful way, that can set up a much sort of stronger dynamic and relationship moving forward. And it's something that, you know, we often teach people within the venture community when we're talking with Black VC, but it's something I've lived in my own life consistently. I mean, one of the best pieces of mentorship, weirdly, I got, which led to Black VC, was, you know, talking to gentlemen like Lo Tony over at Plexo Capital and Charles Hudson and Precursor, and they said, hey, go, you believe, you're telling me that there's this growing segment of junior Black professionals in venture. Go get a critical mass of them. Show me that there is desire to come together and utilize that that community to be successful and to, you know, learn and get that mentorship. Go do that. And that's what we did. And then we went back to those individuals, and that started to get sort of the partners and the broader ecosystem to lean in more and more to those efforts. But it's because we provide that feedback loop. I listened to what those individuals were saying and then put them sort of in the loop as we continue to build.
I think that's a great point. So we've got a lot of questions, and we've only got a few more minutes that are around the idea of how do I become a VC? How do I, instead of becoming, I don't want to raise my own fund. That's the feedback I keep getting. Go raise a fund. I want to work at a larger firm. I want to gain the experience there. So I'm going to give you those two questions together. The third is, and how do I pivot from something else to VC? And feel free to answer any part of that question.
Yeah, totally. I think it starts with, you know, number one, you should start forming a relationship with some of the folks at the firms that you really admire, and recognize that, you know, you can use time as a proxy for trust. And that's really, you know, what the relationship building kind of scaffolds to for when the time is right for that firm to think about, you know, the way they expand their partnership at any level. So I think that's one. And, you know, folks are, whether they're on Twitter, they're on LinkedIn, you know, you just got to, and if we know them, you know what I mean, we can always kind of help make connections. So I think that's number one. And recognizing that referrals, you know what I mean, even if it starts with communities like the one that we're a part of today, you know what I mean, that can go a long way. And we've all been the beneficiary of those referrals and those intros. You know, I think the second piece is finding ways to be empathetic and supportive to founders in a portfolio of a venture firm that you're really interested in, because that reference and that piece of feedback also carries a tremendous amount of weight. So when one of the CEOs I work with says, you know, hey, oh my gosh, this person's been super helpful. They came out of the woodwork and helped me on X, Y, and Z. It's like, oh my gosh, great. You know, we've got to start building a relationship there. I think it's important. The third is, I think that everyone needs to find their kind of superpowers and their almost kind of like their style of venture, right? And I think, you know, everyone has, you know, some combination of skills, talents, prior experience, and what they naturally gravitate towards. I think it's important to take time to reflect on what that can and could be for you, and then to start making that manifest itself in the world, whether that's through your writing, whether that's through the conversations you're having, whether that's, you know, just in terms of the ways that you're spending time in nights and weekends, because I think that's another, you know, super, super important piece of this. Is just, you know, having that unique, differentiated kind of superpower that can be a part of your narrative, and thinking about how that narrative can fit in with a broader firm. You know, I think that's how you make the case, you know, like this for how and why, you know what I mean, you'd be an incredible part of joining that firm.
And I think to add to kind of an earlier point, and I want you both to talk about it, is, you know, it was great if you're transitioning from an existing job, because what makes a really good VC is usually someone that has that experience, either being in the management, you could have been a CEO, you could have been a senior manager, you could have been in a startup, created your own startup, or joined a startup that had success. And those have usually been a nice entry point. So transition is usually because those individuals usually have a whole lot to add in that conversation with the founder. So that usually is a great transition for you.
Mm-hmm.
Well, it's interesting. When I joined Lightspeed, I thought, my gosh, given that I've got 15 or 20 portfolio companies that I've invested in over the years, obviously they want me here because I can help them find good deals. So I brought 2 or 3 of my portfolio companies in and had them take a look at them because they were looking for the next round of funding, and they went thumbs down on every one of them. And I went, holy shit, I'm sorry. I didn't realize I was that bad. What I learned was the reason the firm really wanted me to join them was not so much for deal flow, not to identify new ideas, but to help the portfolio companies who had in fact gotten an investment already figure out how to scale the business. And given that I've run businesses for much of my career, that's my role at Lightspeed. It's not to find the next deal, but to help the next deal that just got funded proceed to success. And I think it's that. You can call it mentoring, you can call it sponsoring, you can call it whatever you want, but that's my role at Lightspeed. And it's about helping whoever is the successful founder of a company get that company to where we want it to be within 3 to 5 years.
No, absolutely. And from a founder side as well, if you are an entrepreneur, kind of an early stage, and you're trying to raise money, like, it's a relationship. It is a marriage. You can't kick out your investor once you don't like them. They're there to stay. So you have to select the one that are going to add value to you. The money, again, is not the most, it's the time and the knowledge and the one that really is invested in seeing your success. Fred, I think you wanted to say something?
Yeah, I mean, I think the guidance I always give to people is sort of, twofold, which is, first of all, run a process. Make sure you're running a process. And that means, you're building lists, and you acknowledge the fact that, more no's are going to be said than yeses, because you're finding the right fit ultimately. And you've got to be comfortable with that ultimately. And then second, you've got to do your homework. Like, people really jump on either thinking about venture capital as an industry without really understanding what the role of a VC is really in this community ecosystem. And sometimes people get excited about the deal making, right? And certainly it's a big part of it. But, one thing that I tell people all the time is my job is to say no 99% of the time. And you've got to be comfortable that you're going to be saying no very often. And yes, it's the yeses that get me pumped and excited, but you can't handle the no and sort of the, feedback part of the job, it's going to be pretty tough. And we often, in at least society and in the tech sort of discourse, talk about the highs and not so much the lows. And there's a lot of lows. I mean, the other part of this is we're going to lose money. We're going to lose millions of dollars in your career, and you're going to, probably over half the deals you're going to do are going to go to zero, right? And you've got to be comfortable with that, and you've got to do that work. But also when you're interviewing, you need to come in knowing who you're talking to, knowing what that firm looks for, what they like, and articulating why you're the right fit match for that. And at the end of the day, what a VC is looking for, and as you run your process, is they're trying to map that to your ability to hunt similarly, if you're looking for the best deal. And so if I'm the best firm, I'm going to evaluate you on, are you hunting at me as if I'm the best firm? What are you doing? How aggressive are you trying to get to me? And I'm going to use it as a proxy moving forward if I hire you on what you might be able to do for me when it comes to finding those great deals. And so, you've really got to come at it with that approach, and you can't approach it from the model of like you did when you were in college applying for jobs, going to a website, of dropping resumes, reaching some folks out to LinkedIn. That's going to do it on its own. So you really got to sort of really lean into that process, and it's going to take a while. So don't do this and don't begin on that process when you've decided to leave or you've left already. This process could take 5 months, 6 months to getting that role. And every firm, I tell people all the time, every venture firm is simultaneously hiring and not hiring at the same time, because everyone's going to make that decision for the right candidate. And your job is to prove that you're the right candidate ultimately.
A lot of sense. So we are coming upon that hour that we often refer to, in fact, for a few moments past it, that we refer to as the witching hour. So I want to take a moment to thank everybody who participated today. There were some questions that were generated in the Q&A that we didn't address. I'm going to send those, including suggested readings. I'm going to send that around to the panel. And then, like I said, we'll add some things to the recording when it goes out, which will probably happen later this week. Also reminding everybody, we still have our standing Thursday meeting this Thursday at 1 Pacific. And I can actually say 1 Pacific this time because there are more people on this call on the panel from the West Coast than the East Coast for a change.
Oh, we need to change that again.
Yes. So thank you all very much. Sam, anything else? And if there's anything any panelists would like to add.
Any parting words of wisdom you guys want to say?
Stay safe.
Thank you.
Thank you for organizing. These communities are what it's all about.
Great.
Absolutely.
And
Thank you guys. Thank you, Ron Brown. Thank you, John, Peter, Meredith, Sam, for all the work and all of this. This is awesome.
Thank you so much. We really, really appreciate it. Thank you for taking the time with us. Everybody, we really appreciate you. We will send out the videos next Thursday, open mic. Looking forward to it, guys. Bye.
Thanks, everybody. Bye. Have a great Tuesday.
Ciao.